right, folks, there was a big announcement with General Motors this morning, and they just reported a brutal $1.1 billion in costs that directly attributed to the tariffs. And your finance could be next, and I want to make sure that you are prepared for this. So let's go to the article and the announcement from GM. So General Motors said it suffered $1.1 billion profit hit from Donald Trump's tariffs and revealed no plan for a near-term fix to return to the pre-tariff profit levels from last year's profit level. So, on Tuesday, it earned 2.50. It announced that it earned $2.53 per share. That was above the Bloomberg consensus of 2.33, but it was short of the $3.06 that it made a year ago. And what it's saying now is that it has no plan right now in the near term that could fix the profit level so that it would go back to a 306 level. So basically saying, get used to 353. We're going to try to bring it up a little bit, but really get used to that and maybe lower. So GM's profit also suffered from higher warranty costs and buildup in inventory in electric vehicles. So they had made a lot of investment in electric vehicles, and now they have this inventory buildup that they're going to have to get rid of. And the reason why they're going to get rid of those is because they're basically losing the federal subsidies that when Trump passed the big beautiful bill. And so now they don't have the subsidies, so now they're losing money on that. So GM results showcase the difficulty automakers face to maintain profits in an environment that newly penalizes globally integrated parts supply chain and cross-border vehicle sales. So, but it's broader than this. It's not just GM. GM is really the first one to kind of like be hit by this, but you can expect like Ford Motor Company already announced, had some warnings about that. And it's really anybody that is globally integrated. They have a globally integrated either supply chain or production environment. So all of those are going to be affected dramatically. So it's not just GM, it's not just the auto industry. It could be high tech. So look for companies, if you're investing in the stock market, make sure that you look for companies that are really dependent on this globally integrated supply chain. So GM hasn't moved to raise their already high average sticker prices, not high enough anyway to recoup the tariff costs. Instead, it opted to absorb these tariff costs, and then they cut some costs, but they also are planning to repatriate some of their production. So this was actually an announcement that they made in June, where they said they would repatriate some of the Mexico production capacity and move them into the US. I'm not sure that this is going to actually save money for GM to move that, or maybe in the long term is going to save money, but in the short term, I'm not sure it's going to save money. But this is something to look at and see what's going to happen. So as I said, yeah, they already announced that in June. So the shares of GM fell 5.9% just in one day due to this announcement. People are starting to realize, or maybe the stock market, Wall Street, is starting to realize that this is a big problem if tariffs are going to impact the profit. But I'm not sure what they were thinking about before then, but it was pretty obvious that it would affect these companies. The net income still declined 35% to $1.9 billion compared to $2.9 billion in the second quarter of last year. So now this is something interesting. So the car maker said that it can offset 1/3 of its $4 to $5 billion in tariff exposure. So it can offset 1/3 of those later this year. As they have more mitigation effort, they have more things that they can do to kind of mitigate these increased tariff costs. And then they already started some of them, and then they're waiting for that to kind of like take effect, basically. But it also indicated that the toll from those tariffs may be higher in the current quarter. So they're talking about the Q3 quarter, higher than in April, June. So in April, June, Q2, it was $1.1 billion in costs from the tariffs. And now it's saying that of course, in Q3, they say it's going to be even higher. These costs are going to be even higher. So also because August 1st, as you know, this is the deadline, the very firm deadline, 100% firm, well, not 100%, firm deadline for the tariffs to take effect. And then, so this would means that if these take effect in August 1st, that means that these tariff costs are going to go through the roof. And that's why they're saying here that it's going to be even higher in Q3. So basically brace yourself for the worst here. But let's going back to this. So their profits dropped 30%, 35%. It's not just a red flag for the automakers, it's a red flag for all industries who are leveraging this global production and supply chain. And so consider this like the warning sign and leading indicator of what's going on. And I'm going to talk today about kind of like this is a kind of warning shot in terms of what's your job, what's your retirement plan, what's your home value, and what does your investment portfolio should look like, what you should do about it. So how will that hit you? So things that you should be considered, even though you may not be working for GM, your job may be at risk. So consider companies that are under pressure, have to cut costs. That means layoffs. So GM is probably one of the first things that they're going to be doing, even though they're moving some production to the US. You can expect there's going to be some layoffs and then some hiring freeze, and other companies that are supplying parts to GM. So they may have to do some layoffs, they may have to do some hiring freeze and canceled bonus, etc. So if you work in manufacturing, logistics, all of that, so that's going to be affected. It's going to be because the global supply chain is going to be completely redone and shifted. Now, your investment. So if you're looking at the stock market, if you invest in the stock market, if you have a 401k account, if you have all of that, so the lower corporate profits means lower stock prices. So it's as simple as that. So if you want 401k, an IRA, brokerage account, even a pension plan, you're likely holding, kind of like large cap assets like GM, like Ford, and you're going to see the value of your assets actually go down. So your retirement timeline, so you might be a little bit different. So for 401k, if you lose like 5, 10, 15, 20%, if the stock market crash, that means a major market correction. That means you may not be able to retire this year or 10 years. It may delay kind of like your retirement plans. Your real estate. So uncertainty kills confidence. So when you have more layoffs, so buyers kind of disappear. So we may end up in a seller's market on the real estate side. I'm going to talk about that in a later video. But home values can stagnate, in worse, decline. So you'd be prepared for that. If you're an investor in the real estate sector, single family, I think this could be a great opportunity for you to get on board on the single family rentals. And then kind of invest in that. So there's going to be more renters potentially, and so that would be a good thing for these investors. Now, that may affect actually your daily budget. So these companies some of them are going to pass through these tariff costs to the consumer, because they have no choice. It's not because they necessarily want to. It's also about survival. They have to find a balancing act here between making enough profit to please the investors and stay alive, and then also making sure that they don't piss off their customers, and that they continue to buy their products and services. So obviously, we've seen like a trend since the beginning of the year where consumer spending has been declining dramatically and has been accelerating. So I suspect that this is something that's going to continue to happen, and this is also going to be kind of like going in that same direction. So expect higher prices on vehicles, electronics, but also groceries. So just be prepared for that. So that means from the consumer's perspective, it's really working with your budget. So if you were planning to buy a vehicle this year, a lot of consumers are going to say, well, I'm just going to keep my rusty old car for a couple more years. It's paid off, and I'm just going to wait. So, this is the kind of decisions that people are going to make. And, instead of buying a new car, I'm going to buy a used car. So anyway, so that's the kind of things that you can expect for that. So the bigger pictures, as I mentioned, so GM isn't the only one bracing for impact. So Ford already warned about the similar tariff cost situation. Tech companies also rely heavily on imported components. So this might be the next domino to fall here. Small businesses can absorb the same costs. They cannot absorb the same cost increase, and will pass them on. So, like GM and Ford, they have actually, manufacturing capacity here in the U.S. That they could increase. So that's the good news for them. It's still going to disrupt their supply chain, but for smaller businesses, I mean, they rely heavily on imports for their inputs, for their parts, for supplies that they need, and it's going to be very hard for them to absorb the same these tariff costs the same way that these larger companies can do them. So you can expect smaller businesses to actually shut down. That means also kind of layoffs for smaller companies. So it's not just one company, even though I'm just talking about GM, but it's really a systemic risk that I'm seeing, and that you need to be prepared for. So this is not just, it's not about politics. It's really about, it might have been caused by some policies that were done, but this is really about your survival. So even if you're a big Trump fan, I recommend that you look at these things and prepare yourself. Don't drink too much of the Kool-Aid. Really watch after yourself. So don't just blindly follow what's going on. Really look at what's going on and make sure that you look at your income, you look at any kind of investment you have, that your property value, make sure that you stay within budget, and check how you're doing overall. So that's what matters. What should you do, right, before it's too late? Well, reassess your risk. I know this sounds like a big word here, but if you're investing, look at your investment and how are you doing. If you don't know what you're doing in the stock market, you don't know what's going to happen in the stock market. The stock market will most likely decline over the next over the next 6 months. So if you're not sure what's going to happen, you may want to take your money out now and then wait. If you know what's going on and you're plugged into the stock market, then yeah, there are opportunities for you there. But for most people, that's not where you should be. So stay in cash, diversify your investment into other asset classes also, whether you're professional or not. Look at real estate, look at other asset classes that are more stable. The key here is going to be to preserve your capital. That's going to be extremely important. Also, you want to increase your liquidity. So the more cash you have, the better it's going to be. Also, not just to survive, but also to take advantage of opportunities that are out there. So if you leave your money there and if you leave $1,000 in the stock market and it turns into $500, then it's hard to go back up. You need to do like 100% return to go back up to where you were. So that's a big return. If you know how to do 100% return on a consistent basis, then you don't have a problem already. So you're probably not watching this video. Stress test your income. So what if the job slowed down? What if you get laid off? What's going to happen? How likely is your job? How secure is your job? Is your company, your employer, is it heavily dependent on on globally integrated production and supply chain? Look at that and make sure that you secure yourself in a good position. I would delay major purchases like cars. Even though GM could definitely use some customers to get rid of some of their vehicles and increase profits, but really delay many major purchases as much as possible. And then my final thought is that this isn't just about General Motors. This is the first company really to announce something this dramatic and be clear that this tariffs added $1.1 billion to their cost directly. So, and it's not about, and the policy is the policy, whatever the government wants to do, but what's important to you as an individual is to figure out in any environment what you're going to do, what's going to happen with your inflation, what's going to happen with your wallet, with your job, with your investment. That's your job to basically assess what's going on with the policy, with the politics, and then determine what's the best investment for you and the best decision for you. So this is a fire alarm, not just for investors, but every American who is trying to build a secure future. Don't ignore the alarm. Just really think about what you can do best. I've already given you some options for you to look at. If you have any comments, if you have any questions, feel free to put a comment in the video below. And if you're confused about what's going on in the news, in the stock market, I understand perfectly. And on my channel, I try to talk about what's going on, why it matters, and why you should pay attention, and what you can do about it. So if this is the kind of information that you're looking for, make sure you like and subscribe to my channel, and we'll see you next time.